shocking news for the past few days. Personally, when I read the news, I said to myself, it is impossible for Warren Buffett to invest in crypto. We will investigate this news and see its importance and repercussions. Buffett's shocking Bitcoin bet supports $1 million Bitcoin price prediction. Meanwhile, BNB, Solana, Cardano, XRP and Ethereum prices rise. Buffett's conviction seems too late, especially after the mythic 2021 chance of Bitcoin's rise was missed. Therefore, hopes of breaking the crypto 60,000 again, it seems very wonderful news, but we must look into the matter. Before we start looking, let's take a few steps back, and we see why Buffett took so long to invest in crypto until now, if that was indeed the case. Why now? What happened in previous years? And what were his thoughts? And what has changed? Let's see what Warren Buffett and Charlie Munger thought about cryptocurrencies earlier. Well, we'll review some of their respective statements. Warren Buffett stated that cryptocurrencies is worthless. And in an interview with CNBC, he said that I don't own Bitcoin or any cryptocurrencies, and I never will. And following a previous statement by Charlie Munger that Bitcoin is rat poison, he said yes, Bitcoin is rat poison squared. While Munger said I wish digital currencies were not invented at all. He even admired the Chinese government's firmness against cryptocurrencies. As you know, the Chinese government has banned digital currencies. And all of the above was declared during the mythical rise of Bitcoin in the last 2 years. And were the statements in this way because they missed the investment opportunity? But in reality they are not the only ones opposed to crypto, there are others and even whales. On the other hand, there are supporters, especially for Bitcoin, such as Chamath, Cathie Wood and others. And the question is why Warren Buffett and Charlie Munger previously overlooked cryptocurrency? Who knows, but it is clear that we cannot ignore their opinions, and this is due to the fact that in the end, they are both giant investors. Berkshire Hathaway achieved a compound annual growth rate of 20% during 55 years from 1965 to 2020. This number may seem small, but it is double the S&P 500 profits. This means that if you had invested in the company or with Buffett $1,000, during this year $55 million would be $23 million. A mythical number, but for cryptocurrency investors, you will tell yourself 20% what this number is. Well, let's see in turn what digital currencies have achieved. Available data from mid-2013 until today, the compound annual growth for these 9 years was 120%. I mean, if you invested $1,000 during these 9 years, today it would be $1.2 million. It is true that the compound annual growth is greater, but the duration is shorter. Of course, the past does not determine the future, but Warren Buffett's past proves that he achieves higher profits than the market constantly, and certainly not every year, but on average. So we should not ignore their opinion, but this in the past, it may have changed today. As we mentioned before, did they really invest? Let's investigate more on the topic before moving on. They made terrible statements against Bitcoin and we noticed that their investment results are very beautiful. So we will see the reasons behind these statements. We finally get into the details. Warren Buffett's statements or views on cryptocurrency were derived from the following. First, his understanding of the difference between constructive and non-constructive assets. Constructive assets are assets that generate other assets. What I mean is if you have, for example, a farm, it will generate fruits and vegetables for you. What I mean is that the farm is an asset that was created for you, a second asset, which is fruits and vegetables, meaning something of benefit was produced for you. As a property that generates rent, company or shares, which is a partial ownership of the company, it generates products. Simply if you own shares in Apple, indirectly, this asset generates for you an iPhone, MacBook and others. These are the constructive assets, and this is the basis of the economy. As mentioned earlier, if you have a farm and your neighbor has property, you will sell the fruits and vegetables of your farm to your neighbor, and you get the money you use to live on your neighbor's property, and thus you make money for him as well. It is the basis of the economy movement. While non-constructive assets, on the other hand, are assets that do not generate any value. What I mean is that their value is not what they generate, but rather that it comes from supply and demand. For example, gold will not generate small gold bars for you. Digital currencies, NFTs and art paintings also, all of them will not generate anything useful that you can use so that the economy will not grow through it, and this is an example provided by Warren Buffett. Imagine that the system or the economy is based on only two people, the first with Bitcoin and the second with Ethereum. For example, the first sells the second Bitcoin and the second sells the first Ethereum, and they exchange, and then what? And in the end, they will discover that they did not generate anything and that it is worthless. While in the example of the farm and real estate, the money generated will be used to enlarge the farm and will bring greater benefit to the people. And of course the real estate money builds new real estate to inhabit more people. Basing on this, you may be wondering why people exchange cryptocurrency. Warren Buffett lists cryptocurrency exchange under the greater fool theory, which is that you buy an asset hoping that another party will buy it at a higher price than the price you bought, and this is normal even with shares, but the asset itself in the case of shares has value, and you do this because you see that the price is less than its fair value based on what this asset generates as a product or profits. But with non-constructive assets, you make this movement because you see that the enthusiasm of the other party will make him buy at a more expensive price. So his stupidity is higher, according to Warren Buffett, or his previous view, of course. And they summarize the problem with the idea of pricing, and they said that, in principle, for a constructive assets you will not pay more than the reasonable and logical price, as long as, of course, you will calculate its fair value because there are many indicators such as P/E ratio. And of course, if you find this indicator equal to 40, for example, this means that you pay 40 times the profits of the company. Is this logical? So you have the means to compare and calculate the true value, while Buffett and Munger say you will pay too much for non-constructive assets based only on the greatness of the dream and promise of Bitcoin, such as the future changes and we will not use money and the intermediation of banks will be eliminated and so on. And you will pay based on the greatness of this dream, regardless of the price, because of course you did not calculate the price, because of course you simply cannot know the price. All of the above is their previous view, and he was one of the first to predict the collapse of digital currencies after their rise in 2021. So what is the situation today? And we finally got the news of Buffett's investment in digital currencies. The first news gives the impression that they entered strongly, but unfortunately when we focus on the news, the fact is that Warren Buffett, who said about digital currencies that they are rat poison, invested $1 billion not in digital currencies, but in a bank that supports digital currencies by buying New Bank for $1 billion, which is a company similar to Visa and MasterCard. It provides banking services in South America and in Brazil in particular. In return, Buffett disposed of $3 billion in investments from Visa and MasterCard, which do not support digital currencies. Does this mean that he entered digital currencies indirectly? It means, relatively. NewBank has acquired a cryptocurrency trading platform, which is a small part of NewBank's revenue and not all of its business, which in itself represents a small part of Berkshire's investment. NewBank specializes not in crypto but with fintech. Even after their investment, Munger continues to say that cryptocurrencies are a venereal disease. This means that it is true that they invested, but their position has not changed, so all the news that we have heard is misleading. And this Berkshire Hathaway investment is nothing new to them, although everyone is trying to convince you that wow, it is a great thing. Historically, this is not the first time that Munger and Buffett have indirectly benefited from digital currencies. Rather, they previously had an investment in Goldman Sachs, a famous American bank that was allowing some people to trade cryptocurrencies. And Buffett saw that entering Goldman Sachs in the world of digital currencies will allow him to have new opportunities for profit. However, he sees it as an opportunity for banks and not for the investors themselves. And anyway, they got rid of their Goldman Sachs investment in 2021. And today, their indirect investment in cryptocurrency is limited to NewBank, which is a small part of the bank business, which in turn is a small Berkshire Hathaway investment. So there is no need to dramatize it as much as the media do. The bottom line of the topic is if you are against crypto, know the different point of view, and if you are an investor in crypto, always look to the opposite point of view to reveal weaknesses and flaws. I hope you enjoy the episode. Do not forget to support us by subscribing, liking and sharing the episode with family and friends. Rashad, the presenter of your program Hit the Road to Fire, was with you. See you soon.